Welcome to my channel. So today our topic is why the markets keep going up with all the bad news that's out there. Why are they still going up? You know, they're going up with all the doom and gloom videos out there, the pandemic, COVID hospitals, overwhelm, lockdowns, unemployment, food bank lines, hunger, stress, massive debts, bankruptcies, etc. So the bad news is already known in the market, and people are focusing on the wrong areas. The market is not the economy, and the economy is not the market. There are hedge funds, banks, and professionals that have tons of money that they must invest. Pension funds must invest, investing for retirement. A lot of people are doing that. Business is still continuing, and trillions of dollars sitting around. The economy and the earnings are improving. You know, the annual inflation rate for the United States is 1.4% as of September. So inflation is at 1.4%. Food prices are going up much more. If you've been shopping for food, you can see that. So the cost of living in general is going up. And certificates of deposits or guaranteed investment certificates are yielding you 1% or less, depending on the term. 0.3, 0.5, that's less than 1%. How can you live on that? And you have stocks that are yielding you 2 to 7% or more. So to survive, people, pensions, investors, hedge funds, etc., they have no choice, but they must invest in the markets. You know, GIC rates are pitiful. The rate of interest earned does not even cover inflation, and you lose money by investing in GICs. And right now, money is cheap, and this is good for the economy longer term. So keep in mind, currently, money market funds that are paying you less than 1%, like point something, are holding $4.6 trillion. This is the highest level on record. This is not billions, but trillions of dollars. And that money is available at some point in time to be invested. And the Dow Jones Index is yielding you about 2% annually. So the real question is how to survive financially for average individuals, as there's no real other choice than the stock market for passive income or to create wealth or to have a retirement. With dividend-paying stocks yielding you 2.7%, you got to live off of your investments or you have to invest. So everybody's got to invest. So stocks are making money during these difficult times. They're working from home, but they are still working. So you have improving earnings, cheaper prices, and investing is for the longer term. Now, this chart is just to show you here on the right side that you have many stocks, and these are from the Dow, that are yielding you much more than 1 or 2%. You can get up to 6%, 5%, 4%. So there are dividend stocks out there that can pay you. Now, keep in mind the unemployment rate as of October 2020 is 6.9%, the unemployment rate. That means 93% are employed in some form or another, and this is going to change month by month as we have lockdowns and closures and whatever. But generally, there are a lot of people who are working, but working from home. Now, the market is forward-looking. So the market is looking ahead about 6 months. So the market is looking at around spring 2021 when the vaccines should be out. It will be choppy going forward with lots of ups and downs, but there's ups days of 100 points and down days of 100 points. So this graph just shows you the crash from the markets from 2008. And as you can see, it was low, and then it's been going up with all the problems. It was constant problems, but it still went up. And then it crashed here because of COVID, and it went back up. From its low in 2009 to somewhere up here, it quadrupled over a 12-year period. So keep that in mind. That's what people are looking forward. Where will the markets be in 5 years, 6 years, or even next year? Not necessarily this month. So there's only about 55% of Americans who own stocks. So that means there's about 45% of the population who are not in the stock market. They're poor, they're unemployed, they don't have the money right now. But you have about 55% of the population that is in the stock market. Those who are working, large pools of money, hedge funds, banks, all other financial institutions, those investing for retirement. There's constant money going into the market and must go into the market for various reasons. So keep in mind, interest rates are their lowest in 40 years. trillions in stimulus and cash available to invest or just sitting around, and they're going to have to do something. And don't forget, you have a COVID vaccine coming around the corner. And if we're going to have inflation, the last thing you want to hold is cash. So the economy is improving slowly. There's no other choice out there to build wealth, short-term or longer-term. And the economy and employment are improving slowly, and earnings are improving slowly, and dividends are stable. So this is one of the things why the economy is improving and why the stock market is in advance of all of that. So volatile times are ahead. You know, we're going to hear about COVID deaths and infection rates daily for the next several months. There's a vaccine rollout. It's coming. We're getting it. We'll see how that goes. You have interest rates that may be moving up. Who knows? Stimulus package. How's that going to work out? Unemployment rates. What's going to happen there? And we also have inflation. So there's all of these things that are going to cause the markets to go up and down. But generally, you can see the trend here. It should be up over time. So thank you for watching. So I'd like to end this video with a graph of the Dow. And for information purposes, in March of 2009, the Dow was at 6,600, as low as that. Today it's around 30,000. It's more than quadrupled in a span of 12 years. So this is what the markets and people are looking at. Not what the market's at today or all the worries of today. Where is the market going to be in 2 years, 5 years, 10 years, etc. So this is what we have to keep in mind. So hopefully you enjoyed the video. You've learned something. If you have any comments, please let me know in the comments what you think or what you may think what the markets are doing or why they're up. And so if you liked it, please hit the like button and subscribe to our channel. And in the future, we'll be putting out more videos offering information that can be helpful. Thank you very much, and see you next time.